Poor weather and the dwindling demand in China has had an adverse effect on commodity prices in the country. This as the Kenyan economy is bracing itself for poor performance from its major foreign exchange earner tea, as Beatrice Gachenge found out.
This has been a depressing year for soft commodities, with tea performing poorly. Tea is a top foreign exchange earner for Kenya, and the poor prices are already upsetting the economy as millions of tea farmers plan for lower earnings.
I think probably the biggest challenge that they're facing right now is the commodity prices themselves in the international markets. When you look at last year, we had coffee prices perform quite badly or dismally, but the tea prices were quite strong. And we're looking at a reverse trend this year, where the tea prices are quite weak due to oversupply, and the coffee prices are doing quite well due to a bit of an adverse effect in Brazil and other coffee producers. And so when we look at the agricultural sector as a whole in Kenya, it's generally an export market. And the horticultural sector, even as a whole, is facing that adverse effect where commodity prices are sort of fluctuating.
There is a lot of reflection and the relationship between what happens in the world market and here. Actually, the trend would be, actually the curve follows the same. It is the same trend. And therefore, I can't say that the international market or the international prices have not affected here. They do a lot, because you realize that we are not actually consuming our own commodity. Much of it, over 90%, is for export, and so it matters a lot how the world is doing.
Glut in major tea producing countries such as Kenya, India and Bangladesh is a key factor hurting prices.
These prices have been depressed as a result of oversupply. In our thinking, we think this situation will obtain in the next 6 months going forward because of the indicators that we see at the moment. And for us, taking that consideration, we felt it is better to inform our shareholders that, hey, there is a red sign that profits may not be as good as was the case last year, and more so, we even expect a more depressed position based on those indicators.
However, drought in Brazil, the world's largest producer of coffee, leading to low supply of the commodity, with an expected deficit of over 2 million bags, has been a silver lining for the bean prices, performing better than 2013.
I would say we have the biggest challenge that we have is production. We have a big challenge on the production levels that we have, where we are seeing a coffee bush which can produce up to 40 kgs of cherry, producing 2 kgs on average. That's basically what is affecting the Kenyan market.
Already, most agricultural stocks listed at the Nairobi Securities Exchange with tea assets have issued profit warnings, with earnings expected to drop by more than 25% due to the depressed international prices.
This is proving to be a negative exposure on their part, and we can see that effect even in their books. When you look at the half-year results coming from a number of the agricultural stocks, we have quite a number of them even issuing profit warnings for their full-year results, and sort of a drop, 25 to 30% decline in net profit and in revenues as well. So this has sort of played out for the better part of this year, and I don't expect us to have a better outlook even for the better part of this year.
Prices have remained depressed all through the year up to this point, to an extent that it is really affecting realization, not only for Sasini but for the entire tea industry. We are looking at a reduction on price that goes beyond 50%, which is very difficult absorption for business today.
With fluctuating prices and unpredictable weather patterns, does this champion the cause for agricultural stocks to diversify into real estate, one of Kenya's fastest growing asset classes?
Definitely. Well, we had seen rare Vipingos sort of come into diversify through the Vipingo Ridge real estate venture before their takeover and buyout came in. And then also we saw Sasini through Samia Investments make an indication to go into real estate. So this is sort of a trend that is emerging from the agricultural stocks and the agricultural companies to sort of diversify their earnings and protect them from the downturn in case there's a repeat performance in the future.
With lower foreign exchange income, Kenya's current account deficit continues to widen. Further dampening that position is the anticipated introduction of taxes on horticulture by the European Union if the government fails to sign the Economic Partnership Agreement.
One of the things that has emerged right now is the EU EPA agreements with Kenya. Kenya has sort of lagged behind with signing this new agreement, and there were indications in the media that it won't probably be signed until early next year or later on this year, in the fourth quarter of this year. And when we see these trends emerging, it's definitely sending some shocks within the market, the horticultural market, and even the European market as well. They're beginning to look for new avenues where they can bring in their products from. Ethiopia is looking like quite a competitive market right now. Madagascar as well. And when you look at these countries which are producing their products at a much cheaper price, and it's easier for the EU to sort of impose their regulations on the products that are coming into the market, as opposed to the sort of pushback they're getting from Kenya.